presumably the bullion banks that are heavily short COMEX contracts took a beating this week.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics. And the man, the legend, the guest of Dave Kranzler's Silver and Gold Market Update is Dave Kranzler. How's it going, Dave?
Pretty good. How about with you?
Well, come on, man. We had a rally in silver this week. Of course I'm happy. You know, it doesn't.
Yeah, but
it only happens every 20 or 30 years. So let's celebrate that, right?
well, I mean, just for the record here, we're recording at 5:29 on Thursday afternoon / evening Denver time, and this is into my happy hour time or my tennis time. So I can't get that psyched about the silver rally that we've
playing.
Seen. What?
So do you drink while you're playing?
Sometimes.
Yeah, well,
I drink a lot of electrolytes anyway.
Yeah. Well, speaking of which, it is Thursday. And Dave, you can think about this. Perhaps we'll look at some audience comments. I was wondering if it might make sense to start posting. Normally, we record these Thursday. It might make sense to start posting you Thursday night so that rather than the week being over, there's still a trading day so people can watch Thursday night and then still
sometimes Thursdays, as you know, sometimes Thursdays during the day are tough for me. So, you know, they can listen on Sunday and Monday's a trading day.
Well, there you go. Well, all right then there, sir. Well, we'll figure it out and make sure you're on a day that you like. And I mean,
also, just for the record, Chris wanted to know where gold would be next week or silver. I guess either one, my answer would work. It's going to be.
Oh, you're saying not in the COMEX, right?
It's going to be the same as today's closing price, no matter which version of the gold price you want to use, COMEX, Kitco, or LBMA fix, plus or minus some dollars or euros or whatever currency you're measuring it in. So that's my answer for where gold and silver are going to be next week.
That is darn insightful analysis, Dave. You have an MBA. Or something. I mean, I don't know. I mean, that's why you get paid big bucks for writing the Mining Stock Journal.
I don't get paid big bucks. I don't charge enough.
Well, I'll give you a chance to earn it here, baby. You got quite a gold rally this week. Interesting. I don't want to say it came out of nowhere, but even despite, I guess a lot of the attention was on silver this week. And then I'm finishing up breakfast and I see gold at, I think it got as high above 1895 on the Kitco. I'm sure with the futures price already above 1900.
Well, let's clarify that December gold futures price is above 1900. I don't think the August contract, which is the current front month contract, not for long, but it still is. I don't think that ticked above 1900. I don't think it ticked at 1900, but it did have an all-time high close, i.e. COMEX settlement price for a front month contract.
Okay.
1898 and change. And the previous front month high all-time close was August 22nd, 2011 at 1891. And let me take that back. That was in August, so that must have been the December contract.
Right.
So the December contract would have been the front month contract when we had the all-time high close, the previous all-time high close.
Yeah, it's fascinating because, and by the way, Dave, I know we still have about a week to go. Then maybe you'll finally put up with this question. 260,000 contracts open interest for the August gold contract. Now, to put that in reference, at first that came down about 17,000. So as of yesterday, it was 277,000. And on Tuesday, I believe it was, Craig Hemke mentioned in his podcast that with this many days out, going into, I guess, was the May contract or the June contract for gold, whichever was the big month, a month or 2 months ago. At that equivalent time, it was about 225,000 contracts. So is more. I know we still have a week to go, but I mean, gee, you would think you think it's going to end up being a big number again, wouldn't you?
Well, just generally on average and in general, for whatever reason, August tends to be a more active month than June, even though June was the previous front month. So I don't know. I mean, I'll be curious to see what the open interest is on first notice day or the day before first notice day. But certainly there is a trend where there's a lot more entities that are at least holding their contract through the start of the delivery period and taking delivery. Now, if we could just get those people or firms or entities to remove their gold from the COMEX, it would make things really interesting.
Well, I mean, maybe these things happen in steps, and when you think of what might you see before that begins occurring, which is not to say that that is definitely going to begin, but I mean, what's happening now would be at least one check mark box in place there. And I also found it interesting just thinking a lot about, because I was going through the COT report. I've been looking through it the last couple of weeks, and they have that field where it says the 4 largest traders, and in silver, short 27% of the market, which comes out to 248 million ounces, which means, according to that data, that every time silver went up $1 this week, those 4 banks were losing 250 million. And gold, I mean, there's a couple banks out there been getting their clock clean for a couple of months now. What do you think about these shorts? I mean, they took quite a beating this week, didn't they?
I mean, presumably, you don't know what they have on the other side of those contracts. Who knows? Let's not forget that's just part of the equation. They've also got over-the-counter derivatives that, you get those numbers from the quarterly OCC report. So who knows what those look like? Who knows what kind of goofy hypothecation arrangements they have in London, although they would never mark those to market because those are off balance sheet anyway. But presumably the bullion banks that are heavily short COMEX contracts took a beating this week.
Yeah, and maybe it's not exactly whichever 4 is in that COT category. Maybe they have some of that hedged out. But somewhere out there, someone is short. Someone was losing money.
Oh, yeah.
And I think it was Tuesday. That was the second day. That was when silver was really going nuts. That was the first time it started to remind me of 2011. Where I still remember those events, especially in silver, unfolding, and it went pretty quickly. And there were a lot of periods like that where you just keep looking. And I was making videos this week. Silver just crossed 20. I'm like, and then by the time I'm getting that one posted, it's busting through 21. But I guess that's the whole thing. And we've heard it. Nobody wanted to hear it for the last 9 years, but when silver moves, this is what it does.
Yeah, absolutely. So I don't think the comparison with 2011 is a good one at this point. And I actually outline the reasons why in my latest Mining Stock Journal issue, which was released this afternoon.
Where can
which
people
I know
find the link for
you
that,
have
Dave?
not had time to read, even though a lot of people, as soon as it hits their inbox, they read it. But we're missing a lot of elements that you might associate with the type of panic rush into the sector that we saw in 2011. First in silver in the first part of the year, and then in gold, because gold peaked in September that year. Silver peaked in April. So we're missing a lot of there's a lot of elements that are missing, not the least of which is the fact that the hot money retail guys, they're still focused on the tech stocks and the NASDAQ. So we haven't even begun to see that element enter the market, but there's a lot of other differences, and I review that in the latest Mining Stock Journal issue.
Well, I will look forward to analyzing that closely because I'm not sure I entirely agree with you. I mean, sometimes I wonder how many retail people are chasing Tesla versus how much is the Fed's printing press chasing Tesla. I mean, I'm not saying there aren't some out there, but I mean, it's really like an army of people saying like $1,600. Let me load up here. I don't know. Maybe there is, but I mean, to me, I think there's definitely more institutional money coming into silver and silver equities now than in 2011. I think there's a lot more people that are aware of what's going on now, mainly because of Dave Kranzler's Silver and Gold Market Weekly Update, which, by the way, Dave, I meant to mention before, is sponsored by Miles Franklin. For right now, if you'd like to get a gold maple, do so for just $79 over spot. What do you think about that?
Yeah, we did the math before the recording, and that's a good
Beating the
price.
online dealers, and you can find pricing that and anything else, gold, silver, platinum, or palladium at Arcadia at milesfranklin.com. And but yeah, it's not an accident why people are flying into these metals. And I don't know, I how many people outside of the silver bugs were really in silver in 2011? I don't think there were. I was sitting on the New York Stock Exchange, and the only other people talking about silver other than me were the ones who wanted me to stop talking about it. They're like, enough, silver boy.
That's the dudes on the New York Stock Exchange. There was, I mean, it was like it started to feel like the tech bubble going parabolic in 2011. I mean, look at how quickly silver went from $30 to $50, well, $49. So I mean,
And I don't see why that
it was one of those things where you get into a cab in early 2011, and instead of talking about Amazon, the cabbie's talking about silver or silver stocks.
No. I was doing the same thing. I didn't have a YouTube show back then. I was talking because I had just started listening to Peter Schiff in 2009. So I'm walking around Wall Street. I'm like, hey, there's a little debt here. This Fed thing seems like a scheme, and but nobody wanted to hear it.
Yeah, but you're in a jaded population pool there. Outside of there, are you kidding? My fund had like a massive amount of inflows in late 2010, and it was everybody who wanted to jump on the train. The train had left the station, and they were running to catch it.
All right,
we probably had our biggest quarters in terms of money inflows in the first quarter of 2011. That's when the market peaked. Forget the Wall Street guys. They don't care about gold and silver. They just care about getting as big a bonus as they can get every year and getting paid in fiat currency. Your average Wall Streeter doesn't own gold and silver. Gold and silver is anathema to what Wall Street does. Wall Street is dependent on the massive printing of fiat currency. That's the only thing that makes money for Wall Street, is what they can do with it when they get a bunch of printed money. We're seeing it now.
Yeah, well, I
mean, how many silver companies are IPOing right now? You know how many tech companies are been able to like issue stock?
I'll bet you there's more money flowing to. I'll bet you an ounce of silver. There's more money flowing into silver companies now than in 2011. I picked off Rob.
Yeah, I mean, I don't know where you're going to get that. I don't know
Platinum.
where you're going to get those numbers, but yeah, I would definitely make that bet.
Yeah.
Yeah, because
Okay.
back then, and I happen to know this, big mutual funds, like, some of Fidelity's giant general mutual funds started loading up in the mining sector, but, late in the game. We're not seeing that yet. We're just now starting to see general mutual funds start to open up their purse and dabble a little bit in the sector. But there's going to be a flood of money. There's a flood of money ahead of us that's going to come into this, especially wait until the tech bubble pops. There's going to be, the guys that are managed to get to the exits first, they're going to want to do something. They want to go on to the next game. And by that time, gold and silver will be at higher prices, and that'll be the game they go to.
Yep. Yeah, it will be interesting to see.
I mean, that's why the sector took off in late 2008. I mean, you had a massive stock decline starting in, I think it was August 2007 is when the market started heading south. And gold and silver and mining stocks started taking off the last 2 months of 2008, while the S&P decided to go and plumb new lows. I think it bottomed out in, I don't remember exactly, late March or early April 2009. But the mining stock sector was still going like this because a lot of that cash coming out, that's where it was going. So we haven't seen that yet because, I mean, they're not even talking about mining stocks on the financial media, and mining stocks, for as much as all these, the top five, the FANG type stocks, as much as they've appreciated since March, there's mining stocks that have just like done laps around them, and no one's talking about that yet. In 2011, everyone was talking about, everyone wanted to know, what's the next mining stock I should buy? I don't know. I'm busy trying to take profits right now. Here, you want to buy some of mine?
Well, I guess that leads to the last question of today's show. We have seen a significant move now, finally, in both gold and silver.
Can I just interrupt for 1 second?
Sure.
And let me just say, okay, I was at the University of Chicago Graduate School of Business from 89 to 91, right? Cutting edge finance place. Not the Jeremy Siegel, hand puppet for Wall Street, right? Cutting edge research, and
Cutting edge Keynesian research.
I never heard the word gold once. Not once. Gold or silver or mining stocks. Nothing. Zero. Okay. Now that's where your Wall Street guys are getting their education. The bastions of fiat currency and and the Fed acts perfectly in place of a gold standard, so we don't need a gold standard. Take the top 10 business schools, whatever, top 20. That's a high percentage of your Wall Streeters. Wall Streeters don't want to hear about gold or silver. They don't care about it. You didn't hear about it in your business school, so it's got to be irrelevant.
Yeah, we know they weren't teaching it at Princeton based on Bernanke. Just I don't understand gold. My favorite part is that, well, my two favorite parts are that he not only doesn't understand gold, but he doesn't know anybody else. He doesn't have a single friend. I guess he's not a subscriber to the Mining Stock Journal. But then even better than that is how, like, after he says it, like, all the other congressmen just chuckle. They're like, yeah, that's Uncle Ben. So, Dave, for people who don't want to take Ben Bernanke's financial advice, I guess, just what would you say in terms of, we have seen the run up? Do people be careful about a pullback here? It sounds like you're still in the camp of beginning of a broader rally, but what do you say
well, we're, again, I would say, between now and a year from now, gold and silver are going to be a lot higher. But what path they take between here and there, now and then, who knows? It's a volatile sector, and it's always been a volatile sector, and it's, it'll continue to be volatile. I'm seeing some indicators that give me pause for concern that, we've had a huge run since early March, right? I mean, the sector as a whole is just, again, it's lapped the tech stocks several times, and especially late last week and early this week, it started to feel kind of frothy in some of these, especially the junior silver stocks. I mean, I was getting emails, out the wazoo from subscribers who were like, "What do you think of this stock? What do you think of this stock?" And it's just like, man, these are stocks that went from 10 cents to 15 cents because a rising tide floats all boats. But you got to be careful here. So, and that to me it made it feel a little bit frothy. But again, this is just the beginning of what's, let's say we're not even at the base camp for Mount Everest yet, right? But it's still a lot of work to climb up to the base camp. So, and there'll be setbacks. I might lose some people along the way. But I think it's very possible that we could get a 10% correction. Could have may have started today. It could start. Gold and silver closed way off their highs today. It could start next week. Could start 3 weeks from now. I don't know. There will, there are going to be zigs and zags, but the general trend is higher, and it's going to get much higher. And as soon as the trend starts to go like that, that's when you might want to start thinking about harvesting some profits. Not all of them, but and I think we're a long way from seeing this. And if you look at a chart of silver, say between 2008 and 2011, just look at a daily chart, you'll see what I mean.
Yeah, and fortunately for anyone who wants to be able to capture all that, know how to handle it before it goes down, there is the Mining Stock Journal, and you can see what's going on with silver. So obviously you're covering the important topics. It looks like you're on some YouTube show talking about is the silver smash coming, which did not happen yet this week. But folks, if you want,
well, I was not predicting a silver smash again, but we talk about how you define smash in that episode. So this summarizes my feeling the best, or not the best, but pretty good. Back in people who were around in the tech bubble era, 98, 99, early 2000s, they know that there was a website it was a chat board called the Raging Bull. I doubt it's still around, but who knows? I guess it'd be sort of the predecessor to FinTwits or something. And so kind of harking back to that, the title of this week's Mining Stock Journal is "The Precious Metals Bull Market is Beginning to Rage." And in my mind, I was kind of making a obscure allusion to the Raging Bull.
It's powerful.
Well, see, but the key is it's beginning to rage. And the period that it goes from rage to Raging Bull, probably at least a couple years, ahead of us before we can start talking about a top.
It's very zen.
It is very zen.
You went to the salt cave in New Jersey without me to get your meditation game on, didn't you?
No,
I see what's happening.
Do that.
Dave, thank you, sir. Go drink a beer, smash it with your tennis racket. Don't do too much damage. Tell Macy I said woof. And thank you, as always, for joining me. It's going to be fun. Maybe by the time we catch up next week, I'm going to say we have $1,900 plus gold. And we will see how it goes. Good. Although, if you want to know why, one of the reasons why I think that's going to happen, which could be tied to rising premiums on metals, stay tuned because it is coming your way now.